Hi, everyone. It's Friday, March 13th. Yes, Friday the 13th, and we are seeing more signs of stress in private credit. JP Morgan CEO Jamie Dimon famously said, "We are likely to find more cockroaches in private credit," and I think termites is a better analogy. For background, private credit has grown significantly in recent years, and this is lending that's done by institutions that are not banks, so they are not subject to the same regulations. They don't have the same deposit requirements, they don't have the same liquidity requirements, nor are they evaluated for financial soundness and safety the same way banks are. It's grown to be about a $2 trillion market, and their business model is basically taking money from private investors and banks and then lending it to clients. Well, in the past 5 weeks, we've seen five large institutions in this space have to cap withdrawals. This means that their investors were trying to get money out and they didn't have the money to give to them. And one of the more recent to do this capping of withdrawals is called Cliffwater, and they manage north of $30 billion and oversee the largest retail investor private credit fund. And they are what's called an interval fund that sits on top of the entire private credit ecosystem. So they are providing capital and loans to other private credit institutions. So when investors redeem from Cliffwater, Cliffwater has to then sell their positions in these other private credit institutions. So the stress flows downhill. So on top of these capped withdrawals, JP Morgan has announced that they are restricting their lending to private credit and have even written down some of the loans that they have through private credit. So what are the risks the average investor should be aware of? First, private credit has extended loans to some low quality borrowers, and it's very hard to assess the true value of those loans. Second, private credit institutions do not have the liquidity to meet redemption requests. Third, this has the potential for a cascading effect because as defaults increase, the value of the loans goes down, then the banks require more collateral, and those private credit firms end up having to sell assets or go bankrupt. And the end result is credit losses. And you can see the list of banks that have roughly $300 billion in exposure to private credit. And my 2 cents is this is a call to action to make sure that you are diversified and not overly exposed to private credit funds. Because the more and more we see signs of termites in this industry, the greater the risk the entire house could come crumbling down. If you like my content, please like, share, and follow, and let me know your thoughts in the comments.